This is Finance Arcana. And today on episode 1 of Systems of Power, the secret architecture of money, we're breaking down the hidden power of the Bank of International Settlements. And trust me, this story is wild. Huge stakes, insane twists, and a truth about global money that almost nobody talks about. Let us jump straight in. The forbidden claim is simple: the Bank for International Settlements, better known as the BIS, is the most powerful financial institution on Earth, yet most people have no idea it exists. Shockingly, its balance sheet is small compared to global megabanks, but its influence is colossal. And here's the twist: the BIS was designed to have sovereign immunity, legally untouchable, and insulated from democratic oversight. It operates from Basel, Switzerland, but no nation truly controls it. But this part is almost never taught. The BIS wasn't created to stabilize economies for ordinary people. It was created in 1930 to coordinate central banks, protect elite capital, and maintain continuity of the international financial system, even when nations collapsed. Think of it as an early blueprint for a decentralized monetary command center, a kind of proto-crypto governance model, except privatized, opaque, and answerable to a closed circle of monetary elites. The human cost of this hidden architecture is enormous. When crises strike, ordinary workers watch wages evaporate, pensions shrink, and savings collapse, yet the BIS quietly guides the frameworks that determine who gets rescued, who gets sacrificed, and who gets blamed. And what happens next changes everything. Because the BIS was born from a crisis so dark that few dare revisit its origin story.
To understand why the Bank for International Settlements, BIS, became so powerful, you must go back to the end of World War I, when empires had collapsed and the global economy was breaking under the weight of impossible debts. Liquidity compression was strangling markets, capital flight was gutting fragile states, and the gold standard, once a symbol of stability, had become a financial noose. World order was crumbling, and elites feared total systemic failure. And here's the twist: the BIS wasn't created to help nations recover. It was created so central bankers could coordinate secretly, bypass politics, and enforce debt arrangements in ways elected governments could not. Its founding documents describe it as a bank for central banks. But this part is almost never taught. Its architects designed it to be above national jurisdiction and shielded from democratic interference. The goal was simple: preserve the international creditor system at all costs. The human cost of these decisions was brutal. Countries trapped in deflation spirals cut public services, slashed wages, and triggered mass unemployment just to remain credible in the eyes of the global financial order. Structural fragility was not academic, it was hunger, homelessness, and shattered futures. But the BIS's founders believed that protecting the financial architecture mattered more than the suffering of millions. What happens next changes everything, because the BIS would soon gain influence far beyond what its quiet creation ever suggested.
The rise of the Bank for International Settlements, BIS, begins with the men who built it, a small circle of central bankers who operated as an elite class, transcending national boundaries. The BIS was officially established in 1930 to administer German reparations. But that was merely its cover story. The deeper purpose was to create a permanent institution which has sovereign immunity and where central bankers could collaborate without political oversight. And here's the shock reveal: even rival nations trusted the BIS as neutral ground because its legal structure placed it above the reach of any government. But here is the twist: these central bankers were not neutral technocrats. They were guardians of a global creditor network whose survival depended on enforcing monetary discipline, regardless of human consequences. Their incentives were contradictory: stabilize economies publicly, but protect elite capital privately. This part is almost never taught. The BIS's founding board included figures from nations that would soon be at war. Yet inside Basel, They shared intelligence, coordinated gold flows, and maintained financial continuity as if geopolitics were merely background noise. The villain sharpens here. The BIS wasn't just a meeting place. It was an architecture of continuity, designed to allow the financial system to function, even as democracies fell. Dictators rose, and economies burned. And the human cost? Ordinary people endured austerity, wage collapse, and social breakdown while decisions shaping their fate were made in private rooms they would never enter. What happens next changes everything, because the world was about to enter a crisis that would reveal the true purpose of the BIS.
By the early 1930s, the global economy was entering what Kindleberger calls the displacement stage, the moment when structural fragility becomes undeniable. Nations were collapsing under deflation, banks were failing, trade had frozen, and into this escalating chaos, the Bank for International Settlements, BIS, quietly assumed a bolder role. Officially, the BIS was just a bank for central banks. But here's the twist. Its Basel meetings became the only forum where monetary authorities could coordinate secretly as the world economy unraveled. Shock reveal. Even as governments issued public statements of confidence, their central bankers were slipping into BIS conference rooms to negotiate gold transfers, emergency loans, and covert currency support. Political leaders had no access. The public had no clue. And the BIS, protected by sovereign immunity, owed explanations to no one. This part is almost never taught. But key decisions that shaped entire nations' survival were made by men who were not elected and could not be removed. The human cost was devastating, as the BIS pressed for monetary orthodoxy to restore credibility. Wages collapsed, unemployment soared, and social unrest exploded. For millions, the financial architecture defended in Basel felt like a distant empire, enforcing discipline on populations already at the breaking point. Viewer question: do you think unelected institutions should have this much power over national economies? Comment below this video in the comments section and let us know your thoughts on this. What happens next changes everything, because the first domino was about to fall.
Behind the facade of cooperation, one force inside the Bank for International Settlements, BIS, began to dominate the institution's direction. The tightening alliance between central bankers of major powers, who used the BIS as a shield to move gold, coordinate payments, and preserve elite capital regardless of geopolitical tension. And here's the shock reveal: even as Europe drifted toward war, the BIS facilitated transactions between states preparing to become enemies. But here's the twist. This wasn't rogue behavior. It was baked into the BIS's architecture. Its sovereign immunity allowed central bankers to operate beyond political control, creating a hidden channel for financial continuity, even as diplomacy failed. Institutional incentives made the BIS the perfect villain. A structure designed to preserve the system, even when the world beneath it collapsed. This part is almost never taught, because it exposes the uncomfortable truth that global finance values continuity more than morality. The human cost intensified. Workers suffered wage cuts, while gold flowed quietly through BIS accounts. Banks failed while the BIS coordinated rescues that prioritized bondholders over citizens. Structural fragility hardened into despair as entire societies realized the monetary system was not built for them. What happens next changes everything, because the crisis was about to evolve into a full-scale timeline of collapse.
By the mid-1930s, the fracture lines in the global financial system were widening into deep structural breaks. Liquidity had evaporated. Trust between nations was gone. And yet, in the middle of this accelerating collapse, the Bank for International Settlements, BIS, became more powerful than ever. Shock, reveal. As governments descended into economic nationalism, their central banks increased their reliance on the BIS, using its neutral legal status to coordinate in secret, even as political alliances disintegrated. But here is the twist. While nations were erecting tariffs, capital controls, and currency blocks, central bankers were still meeting in Basel, negotiating gold shipments and exchange rate defenses under the BIS umbrella. This part is almost never taught because it reveals a contradiction at the heart of global finance. Monetary cooperation often survives long after political cooperation dies. And that cooperation can sometimes deepen the crisis rather than solve it. The human cost during this phase was staggering. Liquidity compression led to mass bankruptcies. Farmers lost their land. Urban workers watched their salaries shredded by deflation. People were told to tighten belts while the BIS coordinated moves to stabilize currencies that no longer served their interests. Structural fragility wasn't an academic term, it was hunger, fear, and a mounting sense that elites were protecting a dying system at everyone else's expense. What happens next changes everything, because the BIS was about to face a test so extreme, it would reveal whether its loyalty was to nations or to the monetary order above them.
As geopolitical disequilibrium intensified, the fatal flaw in the world economy emerged. Central banks could not preserve both domestic stability and the international monetary system. And the Bank for International Settlements BIS, meant to bridge this divide, became the place where those contradictions collided. Shock reveal. The BIS quietly facilitated gold transfers between nations preparing for war, prioritizing financial continuity even as civilizational conflict loomed. But here's the twist. These transfers weren't accidents. They were driven by institutional incentives baked into the BIS's design. Its mandate favored system preservation above all else. That meant keeping payment channels open, honoring claims, and maintaining settlement integrity, even if it meant enabling regimes on the brink of conflict. This part is almost never taught because it raises uncomfortable questions about neutrality and complicity. The human cost deepened. As central banks defended exchange rates under BIS guidance, domestic economies buckled, hospitals underfunded, social services collapsed, unemployment soared, entire communities crumbled as national policies bent to pressures that originated not in parliaments, but in Basel. Viewer question: in a crisis, should global financial rules override domestic needs? Comment below this video in the comments section and let us know your thoughts on this. What happens next changes everything, because the world was about to plunge into total war, and the BIS would not step aside. When World War II erupted, many assumed the Bank for International Settlements BIS would cease operations. The reality was the opposite. Shock reveal. The BIS continued functioning throughout the war, facilitating certain settlement operations between central banks, even when those banks belonged to nations locked in violent conflict. Its sovereign immunity made it the only financial institution capable of acting in this twilight zone of legality and geopolitics. But here is the twist. The BIS justified its continued operations by arguing that financial systems must survive wars so they can rebuild afterward. This part is almost never taught. Yet it exposes a profound truth. Global finance maintains its own logic, separate from nations, separate from morality, separate from human suffering. And in Basel, the architecture of post-war money was being quietly prepared while battlefields burned across continents. The human cost during this stage was incalculable. As bombs fell, currencies destabilized, and entire populations lost their life savings to inflation, devaluation, and collapse. Families fled with pocketfuls of worthless notes. Businesses evaporated overnight. Economic devastation became universal, yet the BIS's legal insulation allowed it to keep the machinery of international finance alive in the background. Historical parallels abound. Just as empires from Rome to Britain maintained financial continuity through war, the BIS pursued a mission of systemic survival, even at enormous moral ambiguity. What happens next changes everything, because the climax of the monetary crisis was approaching, and the world's financial architecture was about to be rewritten. By 1944, the global financial system had reached its breaking point. Nations were bankrupt, currencies shattered, and faith in old monetary norms evaporating. Shock reveal. Even as the world gathered at Bretton Woods to design a new economic order, the Bank for International Settlements, BIS, narrowly escaped being shut down. Several delegates wanted it shut down for its wartime dealings. But here's the twist. The central bankers defended it fiercely, arguing that the BIS was too valuable to lose, the only institution capable of ensuring monetary continuity through catastrophe. Institutional incentives won. The BIS survived, emerging from the war, not weakened, but strengthened. Its legal immunity remained intact. Its authority expanded. And though the IMF and World Bank were born in the spotlight, the BIS continued working in the shadows, shaping reserve management, settlement systems, and interest rate norms without public scrutiny. This part is almost never taught, because it exposes the quiet truth, even in victory. Democracies bowed to a financial architecture designed above their jurisdiction. The human cost was enormous. Inflation wiped out savings from Berlin to Shanghai. Capital flight reconfigured entire societies. Families who survived the war returned to ruined markets and worthless money. The system had protected itself, but people were left to rebuild from rubble. Here's where it gets even more revealing. In today's world, hard money advocates often compare Bitcoin or other decentralized assets to a modern refuge from state collapse. But the comparison is limited. Crypto offers transparency, while the BIS was built for opacity. Crypto is a counter-architecture. The BIS is the original architecture. What happens next changes everything, because the post-war world would discover that preserving the BIS also preserves a deeper hierarchy of monetary power. Once the Bretton Woods era, where the United States dollar was convertible into gold, began, most citizens assumed a new, more democratic monetary order had arrived. But the reality was subtler and darker. Shock reveal. The Bank for International Settlements (BIS) didn't fade into irrelevance. It quietly reinvented itself as the operational heart of global central banking. Through the 1950s and 60s, it became the venue where interest rate norms, liquidity arrangements, and early capital flow rules were coordinated. And here's the twist. Although the IMF was more visible, the BIS increasingly set the framework within which the IMF had to operate. Institutional incentives tightened the villain's grip. The BIS provided central bankers with something no domestic institution could: a sovereign immune sanctuary where they could plan, experiment, and enforce alignment without interference from elected governments. This part is almost never taught because it reveals a structural truth. The post-war financial system was never fully democratic. Even when wrapped in democratic rhetoric, the human cost became clear during the late 20th century crises. From Latin America to Southeast Asia, liquidity droughts and capital flight spirals punished millions, while BIS-aligned policy frameworks pushed austerity, interest rate hikes, and currency defenses that shattered middle classes. Structural fragility spread globally as nations realized they were still tethered to a system they didn't control. What happens next changes everything. Because the BIS's role was about to expand again, this time into the infrastructure of modern finance itself. Today, the Bank for International Settlements BIS is more influential than ever. Shock reveal: it now guides global rules on bank capital, liquidity buffers, payment systems, and the emerging architecture for central bank digital currencies. While the public debates politics, the BIS defines the technical boundaries within which nations must operate. And here's the twist: even in the era of digital money and decentralized assets, the BIS remains the ultimate coordinator, the quiet referee of global liquidity. Mandatory crypto paragraph. Crypto today acts as a modern illustration of monetary escape pressure, not the subject, but a symptom. When Bitcoin advocates talk about hard money beyond state control, they echo, ironically, the very logic that created the BIS, a desire to build systems that outlast political cycles. But unlike the BIS, crypto's transparency exposes the flows that traditional elites once hid. The tension between these architectures is shaping the next era of financial power. The human cost persists. Every time liquidity dries up, workers lose jobs long before policymakers lose influence. Every time capital flees, communities are hollowed out, while institutions in Basel debate optimal stability metrics. The gap between financial architecture and lived reality keeps widening. Viewer question: do you think digital money will weaken the BIS, or make it even stronger? Comment below this video in the comments section, and let us know your thoughts on this. What happens next changes everything, because the deepest lessons of the BIS are still hidden beneath its polished, quiet exterior. The story of the Bank for International Settlements BIS is not just a historical narrative. It is a blueprint for how monetary power behaves under pressure. Shock reveal: every major financial crisis follows patterns Karl Polanyi, Charles Kindleberger, and Reinhardt and Rogoff identified decades later: cycles of expansion, fragility, collapse, and intervention. And here's the twist: the BIS has positioned itself as the institution that navigates these cycles, not on behalf of nations, but on behalf of the system itself. Polanyi would say the BIS represents the instinct of markets to embed themselves in protective institutions. Kindleberger would argue it functions as a proto-hegemon, stepping in to coordinate when markets freeze. Reinhardt and Rogoff would warn that its frameworks, while stabilizing, often shift pain downward onto households and vulnerable states. This part is almost never taught because it forces a difficult question: is global monetary stability worth its human cost? And that cost is visible everywhere. When the BIS pressures nations to raise rates to maintain credibility, families face mortgage shocks. When it encourages capital buffers, small businesses lose credit access. When it shapes liquidity norms, entire regions experience booms or busts that seem disconnected from local realities. Structural fragility always hits real people first. Money moves in shadows long before it moves markets. What happens next changes everything, because the incentives shaping the BIS are evolving faster than the public realizes. We are now entering an era of geopolitical disequilibrium, unlike anything since the institution's birth. Shock reveal: the Bank for International Settlements BIS is preparing for a world where reserve currencies fragment, supply chains decouple, and capital flows become weapons. And here's the twist: the BIS is quietly engineering new systems, cross-border settlement rails, CBDC, interoperability protocols. Liquidity stress standards that will define how money moves in a fractured world. The villain escalates again. As great powers drift toward confrontation. The BIS's influence grows because chaotic geopolitics increases the demand for technocratic stability. But structural fragility is rising. Debt loads are unsustainable. Demographics are reversing. And liquidity cycles are becoming more violent. This part is almost never taught because it suggests something unsettling. The next global monetary order, MA. Why not be chosen democratically? It may be engineered through Basel consensus long before the public notices. The human cost of the next crisis could be immense. Higher inflation eroding wages. Currency instability consuming savings. Capital flight hollowing out emerging economies. Social tensions turning volatile as financial architecture shifts beneath people's feet. Viewer question: do you think the next monetary order will be built for people or for institutions? Comment below this video in the comments section and let us know your thoughts on this. What happens next changes everything, because the finale of the BIS story reveals a truth few are ready to confront.
The hidden power of the Bank for International Settlements, BIS, forces us to confront a deeper philosophical question. Who should govern the architecture of money? Shock reveal. For nearly a century, global finance has been shaped not by elections or public debate, but by a sovereign-immune institution, built to outlive governments. And here's the twist. The BIS may be neither hero nor villain, but a mirror reflecting humanity's fear of chaos and our desire for order at any cost. The emotional shift is unavoidable. In a world racing toward technological acceleration, geopolitical fragmentation, and new forms of money, the BIS stands as both stabilizer and gatekeeper. The human cost and benefit of its decisions will echo through future generations. Yet one truth remains clear. The power to shape monetary destiny is rarely in the hands of the people it affects most. Tell us in the comments what topic you want us to uncover next. Comment below this video in the comments section and let us know your thoughts on this. What happens next changes everything, because the next episode in Systems of Power will uncover yet another institution hiding in plain sight. Thanks for watching The Hidden Power of the BIS. If this episode blew your mind even a little, smash that like button and share this video with someone who loves crazy finance stories, and hit subscribe so you never miss the next big reveal on Finance Arcana. We have more wild episodes coming in our Systems of Power, the secret architecture of money. You will not want to miss them.